Okay, let's unpack this.
Let's do it.
We are diving into, well, a pretty high-octane mix today. We've got quarterly results and some big long-term strategic planning coming out of Maranello.
Yep, we're looking at the Ferrari Q3 2025 earnings call details, and maybe more importantly, what they unveiled at their recent Capital Markets Day, the CMD.
Right. Our mission really is to get past those shiny financial numbers and try to understand this pretty dramatic strategic decision they've made.
Exactly. It's not just about them having a strong quarter, which they did. It's about this deep kind of structural recalibration of their future strategy.
Yeah.
Especially, around electric vehicles.
And that's the core tension, isn't it? Ferrari, basically built on relentless leading-edge innovation, seems to be looking at the rest of the car world and saying, hold on. They're deciding to, well, fundamentally slow down their move into pure electric cars. Their new focus, right through 2030, is actually doubling down on traditional internal combustion engines, ICE, and hybrids.
So then we need to figure out why. Why make such a big change, almost a reversal?
All right. So before we get into that big pivot, let's look at the financials underpinning it. Q3 2025, it was incredibly strong on the surface.
Yeah, total revenues climbed close to $1.8 billion. That's up, 7.4% year over year? Pretty healthy.
Healthy, yeah. But you got to look closer, right? Because deliveries, they were basically flat. 3,401 units, only a 1% increase.
Exactly.
So how do you grow revenue that much when you're barely selling any more cars?
Well, this is where you see that luxury brand magic, I suppose. Shipments flat, but profitability, it just soared.
Okay.
Adjusted EBIT, that's earnings before interest and taxes, it was over 500 million euros.
Wow.
Which is a 7.6% increase, and it gives them this amazing margin of 28.4%.
Right, yeah.
They're making significantly more profit on basically the same number of cars sold. That tells you the average price per car and the whole margin structure is shifting way up.
And what's driving that margin boost? If it wasn't volume, it must be the type of cars they delivered.
It's absolutely about the product mix. The heavy lifting, financially speaking, is being done by their highest-end models that are ramping up production right now.
Like which ones?
Think about the SF90 XX family, the real track-focused stuff, and the new 12-cylinder family. These are inherently very expensive cars.
Right.
Just getting those to full delivery volume lifts the whole average transaction price sky high.
But the real kicker, and honestly the part I find fascinating, is the personalization aspect. Yeah. They said personalizations accounted for roughly 20% of total revenue from cars and spare parts. Is 20% normal in luxury? That sounds incredibly high.
For a company like Ferrari, even in luxury, 20% is, well, it's astronomical. It's huge. It tells you the clients aren't just buying a car off the shelf. They're buying this ultra-curated, almost unique experience.
So custom paint, special interiors, carbon fiber, everything.
Exactly. Look at the Pure Sang SUV or those SF90 XX models. Clients are just loading them up with options, special materials, unique trims, tons of carbon fiber. It effectively turns each car into its own little high-margin product line.
And these are add-ons with huge margins, presumably.
Massive margins. And it shows you have a customer base that, frankly, is completely insensitive to cost when it comes to making the car theirs, expressing individuality.
That strength is just undeniable then. They're doing so well, they actually revised their full year 2025 guidance upwards.
They did. They're now projecting profitability targets they originally set for 2026.
A whole year early.
A full year ahead of schedule.
Wow.
And on top of that, the order book visibility is fantastic. The current waiting list stretches well into 2027.
Okay, so hitting 2026 targets a year early, fueled by these super high margin cars and tons of personalization cash.
Exactly. But that incredible cash flow isn't just padding the quarterly results, it's funding something much bigger.
The strategic U-turn.
The strategic U-turn on their 2030 plan.
Right. Let's talk about that bombshell from the Capital Markets Day. They completely walked back their planned powertrain mix for 2030.
Yeah, the change is really stark and quite revealing, I think. If you go back to 2022, their vision for 2030 was pretty ambitious on the EV front.
I remember. What was it?
It was 20% ICE, 40% hybrid, and 40% pure electric. So nearly half the fleet being battery electric vehicles, BEVs, by the end of the decade.
40% BE. Okay. And the new 2030 plan they just announced?
Drastically different.
Yeah.
Now it's 40% ICE. Double the IC share. Still 40% hybrid, so that stays the same.
Yeah.
But only 20% pure electric.
They halved the BEV target.
Halved it. And Ferrari's explanation for this pivot is rooted in what they call client centricity. Meaning, they say the overall market adoption of EV tech has just been more gradual than anticipated. And
And
conversely, demand for their traditional thermal ICE and hybrid cars has been more sustained, stronger than maybe they expected.
okay, client demand is the official reason. But we have to ask, right? Is that maybe just a bit of corporate spin covering for, well, financial reality?
That's the question. The cost of scaling up battery production, developing entirely new EV platforms,
Hmm.
especially when you only sell, what, 300 to 400 cars a quarter? It's
A
enormous.
huge investment.
A monumental cost.
Right.
Doesn't this new plan, delaying that big EV push, save them a significant amount of capital expenditure in the long run?
Hmm.
Delay those massive infrastructure costs.
That seems like a crucial implication. I mean, client preference is definitely a factor for Ferrari. Their clients buy what they desire, not necessarily what regulators push for.
True.
But this strategy shift definitely buys them incredibly valuable strategic optionality. Time.
Absolutely. And Ferrari's framing is telling. They view electrification as an addition to what they offer, not some kind of forced transition they have to make.
Right.
And remember that new e-building facility they built in Maranello?
Yeah, the super flexible one.
Exactly. It was specifically designed so it could manufacture all three powertrains,
Right.
ICE, hybrid, and electric,
Yep.
potentially on the same assembly line.
Okay.
That investment itself means they aren't locked into just one technological path. It's like designing one factory that can handle, I don't know, coal, natural gas, and nuclear power all at once.
Yeah. It's basically risk management, but they call it flexibility.
Precisely.
And speaking of their actual EV, the Ferrari Elettrica, they're taking an extremely cautious, very phased approach to revealing it.
Super deliberate. We saw the tech hub and the chassis outline before the CMD.
Right.
But the actual look and feel, the interior concepts, we won't see those until Q1 2026. And the complete car reveal isn't until Q2 2026.
That's a very slow rollout. It almost highlights how difficult this challenge must be for them.
Well, the difficulty is maybe summed up best by that piece of client feedback they shared. It was quite memorable.
What is it?
The client basically said, look, electric cars are generally heavy as elephants and, frankly, not much fun to drive.
Ouch.
You guys did well to invest in all these active electronic systems to try and transform the elephant into a horse.
Right, disguise the weight.
And to engage the drivers with things like paddle shifters, like in all Ferraris.
But is that really doable? Can fancy active electronics genuinely mask, 800 plus pounds of battery weight?
That's the million-dollar question, isn't it?
Or is Ferrari setting an engineering bar they might struggle to clear just by adding fake shift paddles? It kind of sounds like they're trying to force-fit the electric future into their glorious internal combustion past.
They are betting their entire brand reputation on the idea that their chassis know-how and their software engineering wizards can somehow overcome physics.
A big bet.
A huge bet. And that client testimonial really confirms their focus. The car absolutely must feel like a Ferrari, whatever is powering it. That's why you hear so much about vehicle dynamics, driver engagement, sound, less about just raw battery specs.
Okay, so to keep those profit margins high and that order book stretching out years, the pace of new models has to be quick, right? But also carefully manage to keep that feeling of scarcity.
Exactly right. It's a balancing act. That order book going out to 2027, it's being constantly fueled by new launches, like the 849 Testarossa family.
That's the hybrid plug-in replacing the SF90.
Correct. And the new Amalfi. Those are driving a lot of the current demand.
And the Amalfi, that replaces the Roma, right? They said it's doing particularly well.
Exceptionally well, apparently. Not just in sheer numbers, but in its function within their strategy. They mentioned that 40% of Amalfi buyers are completely new to the Ferrari brand.
40% new buyers. Wow, that's significant. So this model is basically their main recruitment tool now, their new client funnel.
That's exactly it. It's crucial. They can't really grow their overall client base just by selling, $2 million hypercars to the same people. The Amalfi serves as that crucial entry point. It draws in wealthy individuals who maybe haven't owned a Ferrari before, and then ideally they trade up later to the higher margin stuff.
So it lets them keep the top-tier super exclusive while still carefully growing the total number of customers.
Precisely. And their discipline around model turnover is also key to protecting resale value for existing owners, which is part of the whole appeal.
Yeah, they specifically mentioned that Q4 deliveries will actually be a bit lower.
Right, because they're phasing out some significant models. The limited run Daytona SP3, that production run is finished. And even the SF90 family, which is only about 2 years old, is being phased out for the new Testarossa.
2 years. That's a quick turnover.
It is, but this structured, planned obsolescence ensures the cars hold their value extremely well. It creates desirability. And look at how they're launching the F80, their next big supercar.
How are they doing that?
They said it's going to have a gradual, very measured production ramp-up over a 3-year life cycle.
3 years. Why stretch it out like that instead of just building as many as they can sell quickly?
Because that is the definition of managing scarcity for these ultra-high net worth clients. By deliberately controlling the supply rate, they ensure the car is perpetually desirable, instantly collectible.
Okay. They're selling the desire, the waiting list, almost as much as the car itself.
You got it. It's not just transportation, it's access and status.
And it's not just the cars contributing to the bottom line either. Their non-car revenues are also growing: sponsorships, commercial deals, brand licensing.
Right. And interestingly, they partly attributed some of that growth to their better Formula One ranking in the previous year.
So winning on Sunday really does sell, well, everything on Monday.
It certainly helps. That direct link between track performance and the commercial success of their lifestyle brand activities is clear.
Oh.
The racing halo supports the whole brand image, which helps justify the price of everything from keychains to theme parks.
Here's where it gets really interesting for me. They have this ambitious 2030 target, right? A revenue floor of €9.
Minimum 9 billion, yeah.
To hit that, maintaining that incredibly high average price per car is absolutely critical. So how does Ferrari keep pushing prices up year after year without just slapping a bigger sticker on the same car and eventually ticking off even wealthy clients?
Well, their core principle here is, I think, really instructive for any luxury business. They say they maintain pricing power not by just increasing the price of the same thing, but by delivering constant, rich innovation that genuinely delights the client, as they put it.
So the price increase is justified because the product itself is fundamentally new and better each time.
That's the idea. The justification is baked into the innovation.
Which means that innovation rate absolutely cannot slow down, regardless of whether it's ICE, hybrid, or electric.
Precisely. Their R&D focus isn't just on the engine or the motor. They stressed innovation across vehicle dynamics, the whole experience inside the car, the underlying architecture, the user interface, even new materials.
Lighter, faster, smarter, more engaging.
All of it. If they can demonstrably make the car better in multiple ways with each new model, then they feel they have the justification for the price increase. It's essentially the cost of entry for getting the latest Ferrari.
And that innovation strategy, it also seems to extend to their environmental footprint, doesn't it? They made some serious commitments there, too.
They did. A 10-fold reduction in their Scope 1 and 2 emissions by 2030 compared to 2021.
Scope 1 and 2 being their direct factory and operational emissions.
Exactly. And maybe even more challenging, a 25% decrease in absolute Scope 3 emissions by 2030 compared to a 2024 baseline.
And Scope 3 includes the emissions from their supply chain and, crucially, from the cars actually being driven by customers, right?
Correct. That's the big one for automakers. This commitment is vital for their brand credibility, I think. Especially if they double down on ICE cars for the next few years.
So they need to show they're still being responsible.
Yes. By tackling these targets aggressively, they ensure that even while they're prioritizing that driving emotion with thermal and hybrid engines, they maintain their sort of social and regulatory license to operate, particularly in places like Europe. It protects the brand's positioning as responsible luxury. #tag outro.
So what does this all boil down to? What's the big picture here?
If we connect this to the bigger picture, I think the key takeaway for you is that Ferrari is operating from this incredible position of commercial strength. They're leveraging extreme personalization and tightly controlled exclusivity to generate record margins.
Okay, strong foundation.
And strategically, they've shown, well, remarkable flexibility. And frankly, a calculated rejection of this sort of industry-wide mandate towards pure EVs.
By prioritizing what their clients are actually asking for right now.
Exactly. Prioritizing client demand and maybe delaying some very costly infrastructure investments into pure electric platforms they might not need just yet. It feels like a very calculated strategic pause, and it's fueled by these record profits they're making.
Right. So here's a final thought to leave you with. Given their proven confidence that constant, rich innovation always justifies the price, and they've clearly now mastered the high-margin luxury SUV segment with the Purasang, which many doubted they could do.
True.
What is the next truly innovative product category, something beyond their traditional sports cars, beyond SUVs that Ferrari absolutely must master to sustain that 9 billion revenue floor through 2030 and beyond? That feels like the real challenge of perpetual growth they're now facing.